Good morning, everyone. Happy Friday. It is May 12th, 2023. Hope everyone is doing well. Today, what we're going to be breaking down is there's not too much crazy news. Like, we'll go over it quickly, but we're going to be breaking down the trading plan for the day like we do every day for the S&P 500 futures. Every day, we have some key levels, some good levels to give you guys, and even directionality in the market. So we're not going in this blind what if scenarios, blah, blah, blah. So hope everyone is doing well, getting ready for it. The weekend, last trading day of the week. Let's not overdo it. If you hadn't had the best of week so far, Friday's not going to be the week. Friday's not going to be the day to make that all back and have a crazy week, right? Friday's a week where you have some feelers, trade smaller size, trade less frequently, and try to catch some of the moves, and then walk away for the week. Realistically, Fridays, they're fairly bullish, right? You can lean on that a little, right? Fridays like to close out bullish. We've had many bullish Fridays over the past few years, and I'm going to tell you why today might be one of those specific days. But let's talk about some of the news first and foremost, right? 3 weeks away, the U.S. debt limit gathering initially set for today between Biden and congressional leaders, including House Speaker Kevin McCarthy, has now been pushed to next week as the staff keep negotiating back and forth. There was little progress after the group's meeting on Tuesday, meaning that the partisan standoff remains. The so-called X date approaches as early as June 1st, which is in a few weeks now. At the G7 financial ministers meeting this week in Niigata, Japan, Treasury Secretary Janet Yellen said she doubted whether the 14th Amendment would be an effective solution, saying it's legally questionable whether or not that's a viable strategy. And JP Morgan CEO Jamie Dimon chimed in naturally on what would happen to stocks and treasuries, adding that a default would be a potential catastrophic event, and the closer you get to it, the more markets will panic. Now, naturally, we haven't seen any of that, right? Markets just continuously get a rebid on the back of very strong tech names. Now, if you take a look at market breadth, it's not the strongest, whether you look at the S&P or whether you look at the NASDAQ. Overall breadth is not very strong in these names, in these indices, but there are a handful of names which are quote unquote FANG, but it's a longer list, right? You take a look at chips and the FANG names in Tesla that are sustaining this upside movement, right? They're off over 100% off lows, some of them for the year, and are continuing that momentum to the upside as we see a consistent rebid in the futures market. That's one of the main aspects of order flow that you can see. You can see that people are just dip buying every chance that they get, and there's no real sell pressure. Every time the bears try to come into this market, they get whacked down and take a decent beating. So today might be one of those days where the bears do manage to get slapped around yet again. We're at the tops of a distribution block, but there's no real selling realistically. Logan, we're just gonna have to inflate our debt away. Well, that's typically what's been going on. But you're right. In terms of financials, right, we've had a lot of talk like debt ceiling and regional banks. The uh, the financial sector has been on a macro perspective, been weighing down really aggressively, but it doesn't seem like the overall market really cares that much. Renewed concerns over regional bank uh, sell-offs and regional bank activity after yesterday's larger drop. PacWest, PACW ticker symbol continued to drop after pledging more collateral to allow for additional borrowing under the Fed's discount window, while disclosing that it has lost 9.5% of its total deposits last week. And these recent events and the ongoing news coverage of these events has increased certain risks and uncertainties related to our business and future prospects. This is what PacWest wrote in a filing. While some have expressed optimism that the worst of the banking crisis is over, others have been contemplating the risks that remain and if stress in the sector will spill over to the broader economy. So, if you'd like to keep track of this, obviously you have what was it? What was the ticker symbol? What was it? KB. What was the regional bank ETF? KRE. KRE. If you want to keep track of that, just take a look at the regional bank ETF that's been just absolutely destroyed here. KRE, a lot of downside pressure. We're pretty much near the 2020 lows of this sector, and a lot of people are looking at this and thinking it might spill into the broader banks, right? The big banks like J.P. Morgan, Goldman Sachs, Morgan Stanley, so on and so forth. But realistically, they're absorbing a lot of um, these regional banks, their assets, and actually making a gain from this tragic movement in the regional banks. So I'm not necessarily that positive that it can spill over to those big names. If it does, then it gets very, very catastrophic, and we could see what Jamie Dimon is now talking about, a potential deeper recession into the coming year or so. But naturally, Jamie Dimon likes to flip around, so you got to take these things with a grain of salt. Realistically, a lot of bearish bets have recently been placed, right? Goldman Sachs. What was the other one? Goldman Sachs has now joined another one of the big banks in looking for a substantial drop into the end of the year. We saw that Saudi royals, who knows who it is realistically, if it's even true, have been shorting billions of dollars in stocks. So there is the potential and the quote unquote interest for a drop into the end of the year, that we've seen based on these recent events. But of course, you got to take the macro scale into account with a grain of salt, because if you're looking at the underlying, tech just keeps getting rebid, and that's sustaining the market up, right? You have 20 to 30% of the S&P and the Nasdaq in those big tech companies that is sustaining a lot of this upside. So do you share, I got a question here. Do you share the same concerns that many have about the weak breath, or is this the case, trade where you? So it's a very good question about the weak breath. I think that overall, it's a matter of how big tech really responds to this, because earnings year over year are down, right? There's still the bearish case for the macro economics, right? Naturally, we have a lot of bearish things coming into play, but I think that the weaker breath is not like extreme weakness. I don't think that a lot of names are down like 50, 60% over the past like few months and just sustaining to that downside. I think they're just not gaining speed, and or sorry, they're not gaining traction to the upside at the speed that some big tech names are gaining. So there's a discrepancy between that, and I think the case for them to meet somewhere in the middle, more so than everything just bursts down to the downside, is a higher probability. So meaning that once we get kind of a regulation with our rate hikes, all this financial stuff, the debt ceiling, once that can kind of get regulated, I do see somewhat of a slip down, but I don't think it's going to be anything drastic where things kind of meet in the middle. And when you get to the eventual rate cuts, that's when there's going to be a stress test to a downside swing. So I don't think that necessarily the breath is an immediate concern. I think it's more so something to watch and navigate, as I think that there's overpopulation in big tech where a lot of money is fleeing into the as safety assets to gain alpha. But I think that the upside in big tech can relatively be sustained. I don't think it's going to pull back to where it started from. I think that things just kind of meet in the middle from the breadth spectrum. That's just my opinion on this. Um, Meaning that we're probably not going in for a deep cut recession, as a lot of fear mongers are coming into. I think realistically, dips into like 37, 3,800 are possible. I don't think it's going to get super crazy after that, though. Again, just personal opinion. In terms of the overall equity market today, right, it is Friday. Typically, Fridays are fairly bullish. We're at the top of a distribution block on the S&P 500. We just failed 4163 area, and we're trying to come down. I think that today would be the day that the bulls really take this from the bears and say, you know what, like, enough playing around. Let's just run some stops. So on the S&P 500 futures, I'd be looking at 4150 down to 4147. That's like the first area. I think if that area holds, we have decent traction for the buyers. Naturally, there is a huge resistance at that 63. They will have to overcome that, especially around 72 as well. That's another barrier. So if we get that pop from those areas, 4150, 4147, they have to really run the bid today into pretty much the whole session. The last area I would want to see from the bulls, right, to let the bears kind of into this is 41.39, 41.40. That's like the last region. You start breaking under that, right, you kind of have to tap away from the longs. But I think that you don't necessarily have to tap away, but you have to really let it settle down. I think that at the beginning of the session is going to be very telling. I do want to lean a little more bullish into those levels. I just want to see if we can buy some of those dips to actually just explode the upside into today and get like a nice trend day. We've been oscillating and rotating in this large distribution into this large balance. We are not opening above it, so the probability of a trend day isn't as high. But again, as long as we can hold some of these levels, I do want to see if the bulls can take that, right? And if I'm wrong, I'm wrong. It is what it is. But there are indications that we can lean a little more bullish. We're above a key gamma ledge from market maker positioning, which theoretically would lean a little more to the bull side. So with that being said, we're going to open up our trading room for futures. Check us out at tradeproacademy.com. You can come and trade live with us, where I break down trades, ideas, everything, analysis, read the down for you guys, and all that good stuff. So I hope to see you guys there. I hope everyone has an amazing weekend. Happy Friday. Appreciate you all. Appreciate the questions. Keep that engagement coming. I really like talking to you guys. And let's have a good Friday, right? Let's trade smaller, trade less, and see what we got. So take care, everyone, and we'll see you all on Monday. Check us out at community.tradeproacademy.com, where you can talk to us throughout the session, throughout the day in our free Discord. And yeah, let's see how this day pans out. Thank you all, and chat soon.